Ladies and gentlemen, welcome to In.The.News. Live news and commentary from around the world by your host, Holy Joe Rock and Roll.
What's going on, everybody? It's Holy Joe Rock and Roll coming at you live and unscripted, and this is In the News update on the currency wars of 2015. The dollar continuing to strengthen. Yesterday, March the 10th, closing at 3 zlotys 94 grosz for $1 We're going to 4-to-1, people. We're going to 4-to-1. That's an incredible move. Some 30% up from the recent lows. And this is like an 11-year high for the US dollar against the Polish zloty. Also, look at the dollar-euro trade. The euro now only buys $1.05. Not too long ago, it was buying $1.50, $1.60. So we are going to parity and beyond in 2015, as I have predicted many times. Now, there's still a lot of talk out there about a dollar collapse, no longer going to be the reserve currency. And this is just not only idle speculation, but it's just pure nonsense. Think about it. The ECB, the European banks, the Japanese banks, the Japanese central banks, they're all doing QE now. They're all doing quantitative easing. Now, this is what the United States Fed, the Federal Reserve, had been doing for the past several years, and that is part of the reason why the dollar went down. But, in fact, what it did was help stabilize the U.S. economy. Maybe it didn't produce a lot of growth, but it helped stabilize the U.S. economy. It did weaken the dollar because people were saying, oh, the Fed is printing all this paper money, this weakening the dollar. And it did, in fact, weaken the dollar versus these other currencies. But now, flip the script, people. Just flip the script. What is happening? The ECB is doing quantitative easing, saying they're going to buy like $1 trillion of bonds over the next, what is it, year, 2 years, something like that? $1 trillion or €1 trillion, whatever. It's a huge number. And many experts are saying that there's not enough government bonds, so they're going to have to start buying corporate bonds, which is going to probably push up European equities, okay? So it's also because of the easing, quantitative easing, it's going to weaken these European currencies, especially the euro. And that's why the dollar is going to continue to get stronger. Now, I want to make a quick point. All those people insisting that the Fed raise interest rates. People, do you understand what you're asking for? Okay? In a perfect world, yeah, the rates are too low. They've been too low for too long. But we don't live in a perfect world. We live in a world of other countries, other central banks doing different things, trying to compete. Everybody trying to lower their currencies to get a competitive edge. But guess what's happened? Guess what will happen? Imagine, I could understand the Fed doing some very minor rate increases, like 0.25%. We could do 0.25% twice a year, and there'd probably be very little impact on the U.S. economy in terms of our growth, U.S. growth. However, think about it. If you're trying to buy government bonds, and in Germany, they're paying, less than 1%. And then the U.S. raises interest rates, so now you're getting 3% in the U.S. and the dollar's getting stronger. That is an awesome trade. You are going to sell euros, buy dollars, buy U.S. treasuries, and when they mature in 2 years or whatever it is, the dollar will be stronger. And when you buy back your euros, you're going to buy back even more euros. So not only do you get 2-3% on that money, but you also get the currency increase fluctuation because the dollar is getting stronger. So that's a huge trade, and that will drive the dollar even stronger if the Federal Reserve raises interest rates. So personally, I am opposed to them doing anything in the near term. Certainly in 2015, I'm expecting 0.25% raise, but the economy is still just barely moving along, right? Where there are strong sectors, they're strong, but there just isn't any kind of enthusiasm or irrational exuberance in the U.S. economy. It's just it's moving. There's a positive energy, a positive feel to it, but you don't feel like you did under Reagan. This America's back, enthusiasm, a lot of growth, excitement. You're not feeling that. I believe that will come if we get a really strong, business-oriented Republican president in 2016. That will definitely, I think, loosen the sphincter of a lot of people, or a lot of business people, who are right now still in shock from this Obama administration and all the executive actions, regarding Obamacare, gun control, all of these scandals, and just maybe say that maybe it's a little bit irrational, but the fear is not irrational, and it's making businesses not do things that they otherwise might do. So we have to wait and see what's going to come up in 2016 when we have a presidential campaign, another presidential election cycle, in the U.S. But for now, dollars continue to get stronger. We're going to parity and beyond, as I have predicted. And listen, if you're holding U.S. dollars, if you're getting paid in U.S. dollars, this is a perfect time to visit Europe. With the possible exception of Switzerland, no offense to Switzerland, but the Swiss franc is still very strong and things are very expensive there generally and above and beyond Eurozone stuff. But I was just in Vicenza, Italy, which is about an hour away from Venice, right? Venice is on the Adriatic Sea. And the prices were probably 20% higher than in Poland. You could get a pizza for 5 euros, 6 euros. So that's not bad. I mean, and it was very good, really good Italian pizza. So if you're holding US dollars, now is a really good time to plan your summer vacation. I definitely would recommend you coming to any of the European countries that have the euro, because your dollar will be a lot stronger. You won't be having sticker shock as much, but definitely Poland, Czech Republic, Hungary, any of these countries with their own currencies, you're going to see the dollar even stronger. And I mean, there's nothing wrong with going on vacation and not spending very much money and enjoying yourself. And that's what I recommend. All right, folks, Holy Joe Rock and Roll. This has been an update to the currency wars of 2015. And I will keep you posted as the year progresses. Thanks for watching, and take care, and live long and prosper. Peace out.
Thank you for watching In the News, a feature of HJRR TV, and presented by the Reverend Dr. Holy Joe Rock and Roll. Please rate us, follow us on Twitter, and subscribe to this channel for more In the News.